What's going on, everybody? Welcome back to Matt Money. Welcome back to the channel. It's your boy, Matty Ice. Nobody calls me that. But anyway, talking specifically today about M1 Finance and more specifically M1 Borrow. It allows you to borrow up to 3.5% on your money. And that's pretty good compared to something like a Fidelity, which makes you borrow at about 7%. But it's not as good as an Interactive Brokers, which I think actually ends up giving you fees to about 1.5%, which I think is probably the top of the market. But M1 Finance Plus, if you are a member of that, which I think is 125 bucks a year or so, gets you interest rates at 2%. So it's almost favorable in that respect. You have to be able to borrow up to about $10,000 before you really start to break even, if that makes any sense. But anyway, I want to highlight in this video and very early on that I don't condone leveraging up the portfolio. I think it's something that's a more advanced strategy. I think it's something that you need to be very cautious of, especially if you don't know anything about margin calls and what happened in the financial crisis of 2008. It might just be best if you take a step back and not do it at all. But anyway, let's actually hop into the video and talk a little bit more about M1 Borrow and see how quick and easy it is to actually get money into your portfolio. So let's hop right in.
All right, everybody. So welcome into the M1 Finance portfolio here. I did actually just do a pretty drastic change, which I'll probably cover in a different video, but it was basically just simplifying the portfolio a little bit. QYLD still remains in the portfolio. A total stock market index also remains in the portfolio, but I think that this one is going to be a lot more bullish, I guess I'll say, going forward. And I think it's a good opportunity for me to still remain hands off, but also get a little bit more leverage into the portfolio, because this is going to be something that I'm adding to at least twice a month and then reinvesting dividends. So basically 3 times a month, I'll be reinvesting into this portfolio. And so ups, downs, sideways, I'll be investing more money 3 times a month. And so, yeah, let's just hop actually into the borrow aspect of things. And you can see I already tried it yesterday, and it was the most simple thing that I've ever done in my entire life. Just wanted to give it a quick try. Apparently, I already owe 53 cents, which is fine. It's literally this simple. You obviously have your portfolio already kind of allowing you to invest and borrow up to a certain amount of money, depending on how big your portfolio is. So my portfolio is around $30,000, so they give me about $10,000 of available credit, and I assume that they're doing that to make sure that I have like a 60-40 or a 66-33% sort of margin requirement. So basically, if the stock goes down a little bit, it'll pull it away. But what I have noticed is this has been fluctuating. So it was below $9,000 or $9,800 a couple days ago. It's come up to 10,100, and then today, because the portfolio has kind of come down a little bit, it's down to 10,000. So I wouldn't recommend you utilizing all your credit, obviously, just due to the fact that it'll probably give you like a margin call or something of the like if you were to borrow all of it. But what I'm going to go ahead and do is borrow about half of it, which I'm perfectly fine with. And so you can see I borrowed 5,500 yesterday. I'll just borrow 5,500 again. But yeah, basically borrowing against this portfolio, and I'm going to put it into this portfolio. And what it's going to basically mean is that I'm going to be borrowing about $16 in terms of interest cost every single month. So about 50 cents a day, just kind of like you saw yesterday when I kind of borrowed the $5,500. So that's fine with me, because I'm going to be utilizing this and putting it into QYLD. And for those of you guys that don't know, QYLD is a NASDAQ 100 covered call fund. And I'm going to show you how quick this is, guys. Like, let me just kind of go over and back into my portfolio. And you can see automatically my cash balance is up $5,500. That's how quick it is. And I could easily just go in and go into buying something. So go back really quick. And what I actually want to do is just put it all into QYLD. And that reason being is because it's pretty consistent with respect to how much you can get on a month-to-month basis. So it's generally speaking about 1% a month or 0.8% a month. And so that'll allow me to basically be able to cover that 3.5% cost, as well as be able to put money back in to the portfolio, which is really the goal here, is to be able to add to this portfolio as much as I can. So I'll be adding 500 a month every paycheck, so that's twice a month. I'll be adding 500, so 1,000 a month, plus getting this up to 1,500 or $15,000 will get me about $150 a month in terms of reinvested dividends that'll be going into here as well. So that'll be about 1,500 or 11,000. Sorry, $1,150 going in here every single month, 3 different times. And one thing that you'll notice is as this Pro Shares gets pretty volatile, maybe it won't actually bring it up, but it is a pretty volatile position, and so it goes up and down pretty regularly. And so the hope is over time I'll be able to, um, get it so that, on an up month, up down month, even month, be able to reinvest it into this bad boy. But that's literally how simple it is to get money out of your M1 borrow. So if you have $1,000 in here, I don't know how much they're going to give you, but one of the things that I will note here is if you do have M1 Plus, you do get 2% rates. And so you can see here that you could borrow at 2% rates rather than the 3.5%. You could also earn money on your cash, which is cool. And you get another trade window. So like I said, guys, if you guys are interested, then you can look and get $30 free if you guys aren't actually subscribed and signed up to M1 Finance already. I'll leave a link in the description. You guys get $30, I get $30, everybody wins, and it gives you an ability to automate your portfolio a little bit. I like to use it to just throw $1,000 a month and then reinvest dividends and kind of let it go. And you can see that it's done relatively well for me over the past year and a half, I'd say. So 40% return over the past year and a half. I think I started investing in this back in like July of 2019. Was it 20? Yeah, it was 2019. Yeah, because it was right before I left for Trinidad. So anyway, hope this video helps you guys. And let me know if you guys have any questions about M1 Borrow in the comment section down below. And I'll see you guys in the next video. So cheers.